Hello and welcome to the Money Show, your daily guide to the world of personal finance. It's Wednesday, and that means it's time for a special segment dedicated to one of the most important conversations in personal finance: women and money. For generations, women have managed household budgets, planned family expenses, and made financial sacrifices for those around them. But when it comes to investing, retirement planning, wealth creation, and financial independence, many women still find themselves under represented. And the conversation that exactly why we have launched Women Wednesday. Every week we focus on the financial goals, challenges, and opportunities that women faces at different stages of life, whether you are starting your first job, building a career, taking a break for a family, running a business, planning for retirement, or simply looking to take greater control of your finances. And most importantly, this is your platform, and we'll be answering your questions on investing, mutual fund, insurance, tax planning, retirement, and wealth creation, helping you make informed decisions and build a stronger financial future, because financial independence isn't just about earning money, it's also about making your money work for you. This is Women's Wednesday. Let's get started at the Money Show. You can also send your queries on the Money Show. The WhatsApp number is flashing on screen: 865-797-4571. You can send your query on this WhatsApp number. You can write to us also, the Money Show at etnow.tv. So to answer your queries today, I'm joined by special guest Aditya Shah from Hercules Advisors. Thank you, Aditya, for joining the Money Show.
Thanks.
So let's get started. First query is from Shivani. Shivani wants to build 100 crore in 15 to 20 years. She's writing that the right mix of stocks and mutual fund, current equity corpus is of around 3.5 crore. Want to know if the goal is realistic or not. So, Aditya, 100 crore in next few years. She want to know that goal is realistic or not. What would be your advice for Shivani?
So the investor has not shared proper details as to how much SIP she is doing on a monthly basis. So difficult to comment if she will be able to reach her goal or not. But I can give certain bit of advice based on her time horizon. She's advised 15 to 20 years of time horizon, which is really very long period of time. So from my perspective, the portfolio must be heavy small cap, mid cap side of the market. I have suggested 3 or 4 funds. I have suggested a backup small cap fund in order to see how new AMC companies are really doing. A Bandhan small cap fund is also something that I have suggested. On the Flexi Cap side of the market, the HDFC Flexi Cap fund she can choose. Then finally, on the mid cap side of the market, Motilal mid cap fund she can choose. So these 3 4 funds. I'm not sure how much SIP that she really wants to do. Basis SIP, she should make her portfolio heavy, small, and the mid cap side of the market. Risk profile must be assessed properly before taking any bit of risk. However, your question is really very incomplete. So, basis whatever I have been able to understand, I have given you the advice.
In last few years, with the help of SIP, have you come across anyone who have started investing early and was able to make a portfolio of 100 crores in 15, 20 years or 25 years?
So there was an interesting study by DSP done. That was that in 2001 they launched a fund, and only 3 investors stayed invested in that fund for the last 25 years. There is huge wealth to be created. However, most investors don't stay invested long term. They tend to invest for a short period of time and move out. So my suggestion to anyone who wants to build a long-term portfolio is P is equal to 1 plus R by 100 in the power it is N. So N is the number of years you stay in the market. Uh, the money compounds multiple number of times. Compounding is the eighth wonder of the world. So from my perspective, investing at least for the next 15 to 20 years in a good fund will see your money grow. Not many investors have got this because of the fact that they don't stay invested. So stay invested for in the small cap fund for a long period of time. You will find that you will be able to achieve 100 crore provided you do a good amount of SIP in the portfolio.
Okay, so minimum number of years for the magic of compounding should be 20 or more than 20.
So after 10 years, it starts to does kick in. The longer the time horizon, the better it is. As I said to you, the compounding formula in the compounding formula, N is in the power. So the longer you stay invested, the better returns that you will get.
Okay, so next, I'll moving on to the next query is of Rohini Iyer. She's a retired banker investing for wealth creation, multiple ELSS and equity mutual fund. She is investing in. Wants to know if portfolio need changes, looking to reduce overlap in investment. Your investment fund. So she is investing in Aditya Birla. ELSS fund 3,000 rupees SIP, then Canara Robeco ELSS again 3,000, Axis ELSS 3,000 rupees, Mira Assets and Midcap 4,000, Parag Parik Flexi Cap 4,000 rupees. So this is investment of Rohini Iyer. Aditya, don't you think that now 90% of investors have moved into the new tax regime? So ELSS makes sense for the tax benefit, or for the lock-in, it's advisable to go with the ELSS, at least that lock-in is there.
From my perspective, as you correctly said, 90 to 95% of the customers or the citizens will move toward the new tax regime. Only if you have very high deductions, you will be staying in the older regimes. Deduction to the tune of 2, 3, 4 lakhs, then you will be staying in the older regime. Now, madam's risk profile is that she is retired and don't understand why she investing in equity very aggressively. From my perspective, when you are retired, you need to have a lot of your corpus in debt products or balanced products or large cap products. So from my perspective, first of all, madam needs to help us understand the risk profile. The risk profile at the age of senior citizen does not allow investors to invest in pure play equity ones. Now, if due to excess money she wants to invest in mutual funds, she should stick to large cap funds and flexi cap funds. On the ELSS side, if she's in the older regime, she can invest in Parak Parik tax saver fund or an SBI tax saver fund. On the pure play equity side of the market, she can go towards an HDFC flexi cap fund, a Kotak flexi cap fund, or a Parak Parik flexi cap fund together with a UTI Nifty 50 index fund. Those are the funds she should stick at, and she should also look at balanced fund, an HDFC balanced fund. Those are the type of funds she should look at. She should extremely be careful in assessing her risk at older age. Investing aggressively in the equity market is not suggested. However, personal finance is personal. Everybody has a unique life situation, and her risk profile must be assessed before giving her a proper advice.
But Aditya, as per your understanding, in last few years, a lot of investors have moved out of ELSS to other flexi cap fund or multi-asset fund, or still there is a large chunk of investors who are investing in ELSS fund for the lock-in, lock-in that provides, because with the lock-in is there, even if you want to redeem your SIP, you cannot.
So generally, ELSS funds are not required. They're only required for those people who are in the older tax regime wanting to save under Section 80C. So from my perspective, if you're not in the older regime, then there's no case for you to invest in ELSS. Of course, you need to invest in pure play equity funds. They provide you the flexibility of redemption. which is really very good. So from my perspective, no case as such to invest in ELSS.
Okay, so moving on to the next query is from Rinku. Rinku investing 36,000 per month via SIPs wants to add another 20,000 rupees SIP. Confused between Nifty index and momentum funds, wants to know expected corpus after 15 years. Your investment, Rinku's investment, I can see on my screen. Motilal Oswal Mid Cap Fund 10,000 rupees, Quant Small Cap Fund 4,000 rupees, Parag Parikh Flexi Cap Fund 10,000 rupees, and SBI Contra Fund 12,000 rupees. So, Aditya, what will be your advice for Rinku?
So a 56,000 SIP done over a period of 15 years, if you take a 12% return, would yield somewhere close to about 2.5 CR or so. That is how his corpus will move. Now, I will not advise changes to his fund. I will advise him to continue the SIP. So four funds I have suggested. Quant Small Cap Fund 15,000, Parag Parikh Flexi Cap Fund 10,000, Motilal Oswal Mid Cap 15,000, and SBI Contra 16,000. In the current mutual funds, if you can increase the SIP, that is better. Investors should understand adding a new mutual fund does not increase their return. It only uh, gives them a more bigger problem of tracking the funds time and again. So from my perspective, swing to 3 to 4 funds and continuously monitoring their performance is far greater than trying to buy multiple number of funds.
Okay, so this is the advice for Rinku. No need to add a new fund, increase existing SIPs. Quant Small Cap Fund 15,000, Parag Parikh Flexi Cap 10,000, Motilal Oswal Mid Cap 15,000, and SBI Contra Fund 16,000. So estimated corpus as calculated is 2.6 crore at the 12% CAGR. On this note, we'll slip into a short break. Don't go anywhere. We'll be right back after this break. Stay tuned. Welcome back after the break. You are watching The Money Show, your daily guide to the world of personal finance. Moving on, now we'll take a few more queries, normal queries, not part of Women Wednesday. So now Manish has called us. Manish, you're calling from which place? Okay, so Manish got disconnected, but I have his question, his query. So, investing 80,000 rupees per month, goal is 5 crore in 15 years, wants portfolio review and simplification. His investments, I can see on screen. Parag Parikh Flexi Cap Fund 10,000 rupees, Motilal Oswal Mid Cap 150 Index 10,000 rupees, Bandhan Small Cap 10,000 rupees, Nippon Small Cap Fund 10,000 rupees, White Oak Mid Cap 10,000 rupees. Also his SIP is there. Kotak Contra 10,000 rupees and Gold ETF 10,000 rupees. So this is the present investment of Manish. So Aditya, what will be your suggestion for Manish?
So from my perspective, first of all, 80,000 rupee SIP done over a period of next 15 years will yield about, at a return of about 12%, would yield about 3.80 CR, which I don't think is enough for him to reach his 5 CR goal. So he must increase his SIP at least to 1.1 to 1.1 lakhs. If he cannot increase it immediately, he has to go increase it in step-by-step manner. Now his portfolio must be simplified he must be small cap aggressive since his time horizon is really very long. So Parakale Flexi Cap Fund 10,000, Bandhan Small Cap Fund 20,000, Nippon Small Cap Fund 20,000, the White Oak Mid Cap Fund 20,000, and the gold ETF that he's investing in that he can do 10,000. Invest in these 4 to 5 funds aggressively over a period of next 5 to 10 years. Monitor the performance every 6 to 12 months and from there on, we need to move forward.
Okay, so this is a response to Manish to invest in Flexi Cap, Mid Cap, Small Cap, and Gold ETF. Aditya, what would be your advice for new investors who want to start their journey in ETFs, Gold ETFs, Silver ETFs? So, uh, if somebody is starting their SIP, can they look at investing some portion in gold ETF, silver ETF also, and what would be the percentage if someone is starting with 10,000 rupees of SIP? How much percentage should be allocated for gold and silver ETF?
So, when you start investing, an asset allocation must be done where you decide where you want to invest debt, equity, real estate, and gold. And for the gold part of it, a gold ETF does make sense. 10% of your portfolio should be aligned towards the gold towards gold side of the market. Nippon Gold is a good option available where you invest in a mutual fund through the where you invest in gold through a mutual fund. So from my perspective, 10% of the fund slowly and steadily keep investing across asset classes, and for gold, use a gold mutual fund.
10% of your uh, portfolio or 10% of your investment should be in gold ETF or ETFs. Moving on, next query is from Shalom from Vadodara. His age is 23 year, investing want to invest for next 25 years. Present investments are Parag Parikh Flexi Cap 1200 rupees, Motilal Oswal Mid Cap 1200 rupees, Bandhan Small Cap 1400 rupees, SIP Nippon Multi Asset 1200 rupees, and HDFC Focused Fund. Its an investment is 9,000 rupees. Should HDFC Focus Fund be switched? So Shalom is asking, should he switch from HDFC Focus Fund or not?
Yes, you can consolidate your portfolio into three funds: Bandhan Small Cap Fund, the Motilal Oswal Mid Cap Fund, and the Parag Parikh Flexi Cap Fund. You need to be aggressive on the Bandhan Small Cap Fund and Motilal Mid Cap Fund, since your time horizon is really very long and you are really very young. So, from my perspective, consolidate your portfolio into these three funds, continuously do SIP into these three funds, and monitor the progress every 6 to 12 months.
Okay, so this is advice for Shalom from Aditya. Aditya, if somebody is watching our show live today and we just got inspired after your views and want to start a new SIP, 25-year-old who just started his job and want to start investing with 10,000 rupees. So, which fund you will suggest to that young person who just started, who's planning to start his investing journey?
So when you start, you need to understand what is volatility and how markets are really very volatile. So from my perspective, start with a Nifty 50 index fund. Do start investing in the UTI Nifty Next 50 index fund for a period of next 6 to 12 months. See the volatility. As you stomach the volatility, then slowly and steadily first move towards the active side of the funds where you invest in the Flexi Cap fund. Then 3 to 6 months down the line, switch towards a mid cap fund, and finally towards a small cap fund. So generally, for a new investor, going to a small cap fund will require 1.5 years of investments, understanding volatility in the market. Small cap funds can be extremely volatile, but at a young age, when you are 25, 26, small cap funds should dominate your portfolio. Your portfolio should have those funds as they have higher capability to provide higher runs. So a glide path where the glide path slowly takes you from passive funds to active fund, and in active funds from flexi cap funds to small cap funds.
Ask a direct advice. Your friend is asking you directly that Aditya, I want to start investing with a 10,000 rupees. Just suggest me how much I should allocate in which particular fund. So, what would be your advice? 10,000 rupees, how many funds for a 25-year-old which has a horizon of next 20 to 25 years?
So I will start with UTI Nifty Next 50 fund and HDFC Flexi Cap fund. I will do this for 6 to 12 months. After that, I will switch to a mid cap fund, HDFC mid cap fund, or a Kotak mid cap fund. and then finally I will go to a Bandhan small cap fund or a backer small cap fund. That's how I will proceed.
Okay, thank you so much, Aditya, for joining the Money Show and taking all the queries of our viewers and sharing your experts' opinion on the show. So that's a wrap on this edition of the Money Show. But if you have any personal finance related query, you can write to us or you can WhatsApp us also. Our WhatsApp number is 8657 974571. You can send your query on this WhatsApp number. Our email ID is themoneyshow@etnow.tv. So you can write to us also. All your personal finance related query, your mutual fund related queries will be answered by our experts. So that's it for this edition of Money Show. Stay tuned. More on the other side after the break.